Hello everybody and welcome. This is Chande. In this episode, we look at the technical analysis of the S&P 500 index following the significant market sell-off on the 10th of October 2025. The market sold off about around midday, around 11ish Eastern time, and then there was a pretty strong follow through to the initial sell-off. The absolute trend strength was at minus 100, which tells you that it's a really strong sell-off. And then the red dots were below the lower band, so that tells you it was also a strong sell-off, and the market ended up down 2.71%. So let's explore what this means for the next few weeks. Let's dive in. Just a general reminder that past performance is not indicative of future results, and anything I say is purely speculative. So we're back to the 5-minute chart of Friday. The market was above the upper band, so it was trying to make new highs, and then we had a sudden reversal and a very strong follow through. So, and you can kind of see that from the Chande absolute trend strength indicator down below, the chats indicator, which is in TrendSpider. As the market was making the highs for the day, the indicator itself was not at 100, so it was not quite in the green region. But during the sell-off, it was strongly pinned to minus 100. So this gives you a sense for how strong the downtrend was versus the uptrend earlier in the day. This is a daily chart for the S&P 500 index going back to about a year. This is the TC Arch indicator, which gives you the trend line for the last 50 days. And the point here is that we closed below the lower band quite decisively. So this signals a change in the trend, or certainly in the trend going back about 50 days. So this is my most comprehensive measure of the overall market conditions or trading conditions using about 46, 47 ETFs. And the scale here is plus 300 to minus 300. So plus 300 would be a strong uptrend, minus 300 would be a strong downtrend, and we are within a whisker of being at minus 300. So for all practical purposes, this is really minus 300. So it tells you that there was a very strong reversal from being strong up to strong down in essentially one day. This is a longer term view, approximately 1 year of this measurement. And for all practical purposes, this is minus 300 here. And then the last time we had minus 300, we were near the sell-off that led into the April low. It started in, say, February or thereabouts. And then in general, you can see that during the major sell-offs we've had in the market, we've been down near minus 300. So pretty significant comprehensive sell-off. Here we have daily data for the S&P 500 index. We have the TC Para band indicator with the integrated parabolic stop. The upper band is at +2, the lower band is at -1, and then we have the chats indicator. So the thing I want you to note here is that we broke out and then a sustained uptrend. The trailing stop kept following the prices, and now we have a close below the trailing stop. And this again is telling you that there's a trend change that occurred on Friday. This is a longer term chart showing the same thing, the TC Para band indicator. I want you to look at this event here. We had a single large down day and it closed below the trailing stop and then went down to the lower band, and then we had a longish, essentially sideways movement in the market. So that's a possibility in this evolution, and so that tells you that the potential downside risk is to the lower band, at least in the short term, which puts us approximately in the 6400 area. So this is the para bob indicator, i.e. we've got the breakout body adaptive Donchian coupled with the parabolic trailing stop. The green dots are the parabolic trailing stop. The green area tells you we have a breakout. We have a close below the trailing stop, so a change in trend. And if you look here, we had a change in trend by close below the trailing stop with a large 1-day bar. And then again, we had essentially a sideways consolidation that went on for several weeks. And even though the market made a few new highs, there really wasn't much conviction. Still daily data of the S&P 500 index. The indicators are suggesting a consolidation period, so we look for support and resistance. The initial downside support is in the 6350 to 6400 area, which is sort of the lower band of the previous charts I showed you. And then you can draw a larger support area using these highs on this side, that high, and those lows, and that gives you a support in the 6000 to 6200 area. So that just gives you some potential ranges to look at. This is daily data for the S&P 500. This is a complicated chart, but each step or each line represents a 1.25% decline from the highest high or the most recent highest high. So this gives you a sense for what the drop would look like in terms of percentages. I've marked the February highs at around 61.44, and then 60.88 sort of would be a 10% decline, and this is in the general region of the support area that we've talked about. So that just gives you a calibration for what do the declines look like when converted to percentages. This is S&P 500 weekly data with the TC para band indicator above and the chats indicator below. That's the Chande absolute trend strength. Note that whenever we have a break of the prices below the green dots, we've led to some significant consolidation here. The trailing stop is at 59.35, sort of in the general area, a little bit below the consolidation that we've been talking about. For example, here we get a break in trend and a significant sell-off, a break in trend and a longish trade-off, sell-off, and then a break in trend down to the lower band, but a rebound, and then a break in trend and again a sell-off. So something to keep your eye on in terms of what this trailing stop is doing and where it is. And of course, the chats indicator tells you that if it breaks below the green region, then the first layer of support would be down in the zero area, and then the next step down would be in the purple area. So this is quite fascinating. I use the TrendSpider AI module to make its predictions, and that's here on the left-hand side. It used the Claude 3.7 model. And then on the right-hand side, I've marked the purple boxes, which are its predictions, that is the AI predictions. And then I've also marked sort of my short-term support, resistance, and support. And there's remarkably good agreement. So I thought the AI did a really terrific job of estimating potential areas of support, and it's also predicting a consolidation. So all in all, a very good prediction from the AI module. In summary, the most likely scenario for the next few weeks would be consolidation with a downside risk. And then, of course, there's still the event risk to the upside should the trade issues be resolved.